The GMMB Group congratulates the Trinidad and Tobago Stock Exchange on its 40th anniversary. Your commitment to creating and supporting a sustainable financial market in Trinidad and Tobago is appreciated and recognized. We are here to support you in delivering exceptional care to our investor base. Well done on your service and contributions to Sweet TNT. Happy 40th anniversary.
Right, you are. Well, our thanks, of course, to the Hyatt Regency team for taking good care of us and ensuring that lunch goes as smoothly as it's supposed to. We say a special thanks to PwC, and our lunch sponsor speaker today is Brian Hackett, Territory Leader, Regional Advisory Leader for PwC Trinidad and Tobago. And we'll focus a bit on the impact or trends that ESG has on the demand for capital and how it impacts publicly listed companies. Well, Brian Hackett is the Territory Leader of PwC TNT, and as I said before, and the Advisory Leader for PwC in the Caribbean. PwC in the Caribbean is a group of separate PwC member firms operating in Trinidad and Tobago, Jamaica, Guyana, Barbados, and the Eastern Caribbean, Cayman Islands, the BVI, Bermuda, and the Bahamas. Brian Hackett has a wealth of experience in corporate debt and equity placements, as well as buy and sell support mandates, inclusive of financial due diligence, business enterprise valuations, structuring, project financing, public offerings, financial restructuring, and crisis management. And he advises many top-tier clients, including private and public sector clients across several industry sectors, including manufacturing, retail and distribution, financial services, and oil and gas. Ladies and gentlemen, will you please welcome Brian Hackett.
Good afternoon. I didn't want to be confined to the podium, and I also needed to see the presentation. What I'm going to touch on is ESG. It's not new, environmental, social, and governance. It's what companies that are well run should always have been doing. And the best run companies do actually do that. But what has changed is more of a codification of those practices and a linkage back to how it potentially impacts the value of companies. In the heading, you will see how the impact on publicly listed companies. That is a little narrow as well. Any company whose brand touches the marketplace in a meaningful way needs to have ESG at its core. Because we have all seen examples of companies who don't understand their supply chain, companies who have spillage of oil, gas, employees who have died on the job. Whether those entities are listed or not, as long as they fulfill a part of the public space, then they need to pay attention to what we're about to discuss. Should not be long, just be about 15 minutes or so. So, what is ESG? When it was first introduced as one of our main pillars in PwC, I saw it and I thought, there's nothing new here. This is what we should have been doing all the time. And that, in fact, as I said before, is exactly the case. It is just a recognition of its importance now, as well as building it into things that get measured. Yeah? It's not corporate social responsibility only. It's wider than that, and again, it's part of the measurement framework which we have to live with. So again, ESG stands for environmental, social, and governance. It refers to the non-financial factors that companies are increasingly incorporating into their decision making. I was having a meeting with one of our clients recently, and the CEO remarked that how we looked at it, we don't have an ESG framework done up yet. We think it's important, we know it's important. So what we'll do in the meantime is take our corporate social responsibility architecture and frame our ESG initiatives around that. It won't capture everything under the ESG umbrella, but it's a very good place to start because there's a huge overlap between what we traditionally see as corporate social responsibility and an ESG framework. Another good place to start would be to engage the assistance of outside help to help you form a framework of what your ESG policy should look like. Under environment, it looks at the criteria how organizations perform as a steward of nature. Under social, examines how organizations manage relationships with employees, suppliers, customers, and the communities. Under governance, how the company processes for decision-making, reporting, executive behaviors, inclusive of leadership, internal controls, and stakeholder rights are handled. As you can see on the bullets, we can all think of example. Waste production, plastic industry, labor rights, product safety, diversity and inclusion, executive compensation. They're all things that at one point or another we can think of companies that hasn't handled these things well that have impacted its brand. With the connectivity of the world today, where you know immediately about things happening around the world, you really have to start thinking about these things. And again, it's not just for listed companies. As long as you're big enough where your brand can be impacted and your bottom line can be impacted if you don't manage these things properly, you need to start paying attention. Why has it gained in importance? The main one is the middle one, investor expectations. At the end of the day, when investors, increasingly the PE funds, who are the main drivers, when they discern that you have risk factors either in the E, the S, or the G camp that can impact their return, they will not be as willing to invest in your company, or they may seek to charge a higher return, expected return, because of your inability to deal with those risks. BlackRock, SSGA, both of those big PE funds, both of those CEOs have clearly said, if you do not have control of these factors, we will not invest in you. Yeah? If BlackRock is saying that, that is a whole different thing from how corporate social responsibility used to be handled a few years ago. The SEC's Investor Advisory Committee, Investor as Owner Subcommittee, voted to approve a recommendation to update the reporting requirements of public companies to include material ESG factors. Companies with high ESG ratings can benefit from cheaper financing. Again, I'll urge, this should not be looked at as a box to tick. It is a source of value if handled well. If you, in our own organization, if we don't actively try to increase the number of women in our workforce, don't try to get diversity of age within our workforce, of race, then we don't produce as good solutions to our clients' problems. Because bringing people together of diverse backgrounds produces better results. If in the organization people don't feel that their accomplishments are acknowledged, they don't feel that it's a safe place to work, again, that will impact our ability to attract workers and will impact our bottom line. So again, it goes to the core of our business. Investors, if you go all the way to consumer demand, increasingly private investors are playing a bigger and bigger part as part of the investor landscape. Right now, that investor group doesn't really pay a lot of attention to ESG, but increasingly they will. So when they start to pay attention to that as well, it could impact companies that are not handling their requirements in this area. We haven't seen any regulation in this neck of the woods to this point. I don't anticipate we will see anything soon. Best of my knowledge, I'm not an auditor. I haven't seen any IFRS standards coming down anytime soon. So really, it's more voluntary at this point rather than compliance with regulatory. I see Nigel is indicating I may be wrong, or it's coming. But undoubtedly, we know it's coming. It will come because investors care about it. If investors care about it, the regulators and the exchanges will follow. How has the demand for capital increased? Rising demand for green bonds. There are actually green bonds in Jamaica right now, actually. Fund has just been launched recently. Green financing is a push to increase the level of financial flows from traditional lending sources to sustainable development priorities. According to Reuters, funding has increased from $5.2 billion in 2012 to $540 billion in 2021. Now, I have no doubt that as the term becomes more popular, people squeeze more things into the definition. So it probably is not that big an increase, but it's still undoubtedly a big change from before. The Sustainable Agenda, 2030 Sustainable Agenda, stakeholder and advocacy groups such as the UN Environmental Programme. Last one, back to the investors, thirst for ESG assets. According to Fitch, by 2025, assets will exceed 53 trillion, of a total base of 140 trillion. So again, increasing in prominence. And again, it comes back to what can impact your cash flows, what can impact the sustainability of your return, where can the risks come from? Impact on publicly listed companies. Corporate reporting, I think you should see it as positive as opposed to, again, being a compliance-led thing. It gives a chance to present your company in a way that can enhance your brand, can enhance your ability to attract people to your company, can attract capital to your company. Yeah? So again, don't look at it as a compliance thing. ESG reporting, at some point it will become standardized. But I think that's a ways away. Ratings. We did our best to see if we could find any rating agency within the Caribbean that produces ESG ratings. We couldn't find any. Maybe there are some, but we could not find any. So right now, it's not a formal part of a rating criteria or a rating on its own. But again, that will come in time. And lastly, reputational. We can all name the examples of where things have gone wrong. What's going on in the region? As I said earlier, Jamaica. The Jamaican Investment Fund was launched in 2022. It was accredited in 2022, by the Green Climate Fund, which will allow it to raise access up to $50 million at any given time to implement projects which are geared towards climate change and resilience. Right now, our team in Jamaica is working to convert, I believe, a sugar plantation into a bamboo plantation, and we'll be getting accreditation from this body. Yeah? So live example of funding coming to a project that's real. JSE Green Funds. The JSE Green Funds will raise funds at the Jamaica and regional debt markets to finance environmentally sustainable activities. The funds will be used for fund projects that strengthens Jamaica's sustainability goals. Give you an example of another project that falls within the ESG camp. Right now, the local team in Trinidad is mobilizing on an engagement to help define a climate resilience strategy for 24 countries, being paid for by a particular body. Yeah, so that's the type of assignments that we're seeing increasingly. And we see RFPs coming out all the time for these types of things, because we know that the weather patterns are changing. We know we live in vulnerable communities as far as the weather is concerned. The environment is a huge part of that. So how does the organization reduce its footprint as far as its custody of environmental assets? Something I should have mentioned before. How you respond to ESG has to be tailored to you. If you're in oil and gas, then clearly the environment is a huge thing for you. If you are a huge manufacturer with supply chain all over the world and a number of employees, then social is more important to you. Governance. You're listed on a stock exchange where your executives have aggressive compensation-linked plans. Then, again, now every one of the three buckets will be important, but it's important to tailor it to the risk that you have. So you have to do a risk matrix across the three, map to that, decide the probability of each of the risks impacting your bottom line, and develop your strategy accordingly. That is very, very different from what corporate social responsibility used to be. Yeah? It's not painting rocks at all anymore. Sorry. How do I go back? I think I lost my presentation there. While they bring it back up, so another initiatives in the Caribbean, we've just seen on our local budget, legislation passed with respect to electric vehicles, another not as aggressive stuff. Do we need to do more going forward? Absolutely. The regulation has to put in place the framework to enable investment to come to promote projects in this space, but more will come. These are just 4 things that can promote the green agenda within the Caribbean. Greater collaboration with international agencies. I don't reinvent the wheel. To strengthen the regulatory and financial systems. Greater access to affordable and attractive financing options. More tax incentives for thematic or green bond issuers to spur investment. And enhancement of reporting by publicly listed entities on ESG-related investments metrics. How can we help? I'm not going to go through all of this, not here to by any means to sell PwC services. But these are actual services that we provide in more developed markets, not so much in the Caribbean. 1, services to support PE and private buyers to assess the ESG footprint and impact focused on risk and value creation. 2, sustainable value creation, service to help drive ESG beyond risk and put ESG-led value hypothesis at the heart of investment strategy. 5, data and tech-enabled reporting, services provided by our trust and consulting professionals to support PE houses in developing an ESG policy for their KPIs and KRIs, key risk indicators, for material ESG issues. Yeah? So in closing, it's new. It's not the most relevant thing at the moment, but by any stretch of the imagination, it will become more important. But most importantly, if you take all of the factors, you assess where your risks are, and you measure your performance against them, you will have a more sustainable company. At our own company, we have some very, very, very hard metrics. We will have 50% of our leadership team being women by X date, and that date is not too far away. And that's just one example. Do we like rules like that all the time? No. But the simple message is, what doesn't get measured does not get done. Yeah? So thank you.
Well, our thanks once again to Mr. Brian Hackett, Territory Leader and Regional Advisory Leader, PwC. Thank you, sir, and thank you to PwC for sponsoring lunch today. Let's give PwC a round of applause. Right you are. Well, fear not, the program continues in just a short while. We'll be looking forward to seeing you next door as we're almost back on schedule, which is a good thing. That's how plans go, yeah. Spare not, and we'll get you out of here on time later on this afternoon. So you have another 10 minutes or so, of course, once you're finished with your meal, to make your way back across to the main ballroom area, where our next presentation will be from Morgan Stanley. More to come. See you in a short while. Thank you.